All right, back to work, back to work. I know, better late than never. Thank you so much for sticking around with me here this evening. I know a few minutes late on tonight's video, but it's time to get back to work tonight. Tuesday evening, after all. It is November the 16th, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it is so great to have you with me because my job tonight is to help us find the best trades, setting up for Wednesday's trading session. Got a bunch to cover here tonight on this video newsletter. Charts are all ready, as you can see. We got the oil ready. Nasdaq is ready. S&P is ready. Glad to see you are ready right along with us. Got a lot to cover, boy. A lot of great trades on my radar for tomorrow. Of course, you'll notice got some big, nice, strong bull trends on the S&P and the Nasdaq. Lots of strength going higher here for the bulls. We're looking to buy some pullbacks, looking for some breakouts going higher. And of course, you know me. I'm always got my eyes on some reversals. So we'll talk about how to trade reversals on the E-minis for tomorrow. Over on the oil appears to be having a bit of an identity crisis as we go into tomorrow's oil report. I'll talk about why I say that as we go deeper to the charts here tonight. But a big move up, big move down, big move up. It smells like there's going to be some big range out there developing here overnight. And so I want to make sure you guys kind of know what to look for and how to trade that range on Wednesday's trading session ahead of that oil report midday tomorrow morning. So nice strong trends on the S&P and the Nasdaq. It smells like a range on the crude oil. It all smells like opportunity as far as I'm concerned. So we're going to break this down and talk about my favorite trades in tonight's video. I'll also cover some stuff I'm going to avoid tomorrow to stay out of trouble, right? So make sure you watch all the way through till the end. Now, speaking of tomorrow, before we jump in and get these charts going here, let's just make sure we're all on the same page here as far as the news goes for tomorrow. Tomorrow is probably the lightest news day of the week. Well, let me back up. As far as scheduled news events, again, we've got the petroleum status report tomorrow. If you're trading oil, that'll be the big news, of course, tomorrow for all the oil traders out there. Remember, if you're an oil trader, you want to give that at least 10 minutes buffer on both sides, right? I like to give it 15 minutes. So, 10:15 tomorrow morning, I'm sitting on hands on oil. 10:40, 10:45, we'll get back after it, right? So give it that 15-minute buffer if you're trading oil tomorrow with us in the trade room. We do have that housing starts number tomorrow morning at 8:30 Eastern time. I don't expect that to be a major market moving event. It might get things going. I would imagine what is more possible to shake these markets up tomorrow is this insane slew of Fed speakers. You can see how, look at that. What is there? 1, 2, 3, 4, 5, 6, 7 different Fed speeches, right? Random times throughout the day. Remember, the Fed has told us they're getting ready to raise rates. They did talk about inflation and stimulus. So it'll be interesting to see what they're saying tomorrow. Again, random times during the day. So really, we're going to have to kind of keep our eyes open tomorrow and see if we get any big jumps off things that maybe contradict what we heard from the Fed last week in the FOMC announcement. That's probably going to be probably the biggest potential impact tomorrow. Probably not be the news that's scheduled. It's probably going to be if any of these Fed speakers kind of break rank and contradict what came out last week on the FOMC announcement. Now, my best advice whenever you have these kind of Fed speakers peppered throughout the day is just be ready for anything, right? Because these Fed speakers could say something that for no apparent reason spooks the market. So I'm definitely looking forward to an active session tomorrow in the trade room. And speaking of trade room, don't forget 8 o'clock Eastern time, we'll be trading together tomorrow in the SOT trade room. I'll put all the membership links you guys need to get registered below this video on our website, or I'll put them all in the description of the YouTube video if you want to learn more about that. Later on in the week, we got more on Thursday, and we got a big Clarita is the vice chair of the Fed. He'll be talking on Friday. So we got some more big news coming in as we try to go into that second half. What is really the last full week of the month of November, because we got Thanksgiving here coming at us tomorrow. So be aware of that. If you're an oil trader, 10:30 is your magic number tomorrow. If you trade in other markets like the E-minis, like we do in our trade room, keep your eyes open, because that peppering of Fed speech can definitely get these markets ripping. And don't be surprised if we see something that kind of spooks these markets some point here tomorrow. S&P, Nasdaq, oil, everything's looking good here. Again, we're going to dig into that kind of identity crisis the oil is having here tonight. We'll grab that here in a moment. Let's start first tonight with the E-mini, the S&P 500. What do we know right now on the E-mini S&P? We know the market is very bullish right now, right? We definitely can see the market is bullish. We're not as bullish as the Nasdaq, and I'll talk about why I mentioned that here in a moment. But ultimately, if somebody asks me kind of, what's going on right now on the E-mini S&P, I would say the day began in a range. It jumped up into a range, jumped up into a trading range, and pretty much in the process completed a measured move in the process. It's a bull market, right, into a bullish range, and we're now pulling back, and we're kind of sitting at a couple key levels of support here at the low of that trading range. Whenever I see a bull market into a trading range, I think of three basic ways to trade it. One is I want to buy what we call failure patterns. I want to basically buy seller failures below the range. Then I'll look to find a new channel to trade the rotation, and then I'll look for a breakout. The breakout will oftentimes be roughly equal to how much we go below the range as we go above the range, right? So I'll look for a breakout, right, as we go higher. So think about three ways, and this will also apply to the Nasdaq. Maybe a little bit different than the Nasdaq, though. I'm looking for, again, a failure pattern, right? These are, kind of failures. Wait for the bears to come in and try to get short below the range. Remember, ranges act like magnets, and we have all of this bullish momentum. So one way to buy it is to buy a failure pattern below the range. Another way to buy it is to trade the rotation as we rotate higher. And again, we expect that to rotate roughly about as much going higher here. If we break through that high, now we've got our third option here, right? Third option is to trade that breakout, right? Trade that breakout. Now, at any moment, the bears could come in and spoil this. The bears could take control with a breakout of their own. The bears could short off that pendulum swing. So there's a lot of obviously different ways you can trade this, but this is kind of the key way I always think about going into the market whenever I see a bull market get moving sideways there in a trading range. So as you can see right now, right, there's your range. Here's our level of support. I've marked up the amount above the range, marked it up below the range. We are at a very good spot here right now to be a buyer. My only concern is, I would say, probably not my only concern, but one probably the biggest concern is going to be how the market is rotating off that high. Whenever we have a trend line coming down overhead like this, you got to be careful because sometimes those trend lines can start to kind of grind and really drag price down, right? Which, of course, would lead to most likely or possibly a reversal here and give the bears control. So we definitely have a lot of momentum coming down. That's why I said, the Nasdaq doesn't have this problem right now. You'll see what I mean when I grab the Nasdaq chart. But whenever we have that range, we punch up and then roll lower, little bit more momentum than I'll want to deal with. So how do we deal with that type of momentum concern? Because I do want to be a buyer here. It's very simple. I want to use a failure pattern, but the type of failure pattern we call the two-try failure. For example, right, like this one back here. See how small that pullback is? When you see a strong move up like this, just get underneath the moving average, get those bears to get short, and just buy right into those stop losses. But as you can see, though, this pullback's a lot bigger. Right? A lot more, again, still very bullish, but a lot more momentum coming in for those bears. And so what I'll do is I'm going to let them try once, I'll let them try twice, and then I'll look for that long going higher. Then we can go out, we can find that new channel, and we can trade that rotation. I'll look for entries off the low of that channel. And then, of course, I can mark up my pendulum swing. I can take my profit targets up around those highs, and I can then look for that bull breakout. Right? That's kind of how I'm looking at this S&P here as we go higher. Again, or as we pull back here, right? I want to see bears try once. I want to see bears try twice. That tells me all the bears are in. It also tells me where their stops are. And I know that any big signal candle here will spook those bears, right, and get them to exit. They have to buy their way out of that position if they do, right? So we're looking to basically run the stops of those sellers. And then if we can get a nice strong pop going higher here, then you want to grab that new channel off the high, find that channel low, and you want to drill down and grab that first entry. Always the first test. The first test is going to be always the best test. So failure setup off the low, right? Pullback setup or whatever price action setup that we get, right, as part of our 3-step strategy. And then, of course, we mark up, right? We mark up the pendulum swing, right? And that becomes the objective on the opposite side. And then as far as the breakout patterns go, there are a couple different breakout patterns that, well, there are 4 really that I like to use the most. One of them, and again, a lot of this has to do with how the market kind of goes through that pendulum swing, right? Broken pendulum, broken range in my book. So if we do get that 1-2 go, for example, if it really rips and runs higher there, right? Now what I can do is I can mark up that high, I can mark up that low, and I can drill down and I can buy that first pullback off the low of that channel. That makes sense, right? So if we do see it really rip, and again, a lot of this will have to do with how far do we go, right? Can we get through, that pendulum swing and really start to get it to run on strength? That's a great way to buy that breakout. Or, let's say, for example, right, we get up in this area, we chop around for a while, then we go 1, 2, 3. I'm not going to buy the first one, right? Not going to buy the first one. What I'll do is once I see that 1-2 go, and again, a lot of this has to do with kind of where we are in comparison to that pendulum swing. But once they get that kind of 1-2 go, when we see them jump out of that range like that, bingo, that's your green light. Mark up that new high, mark up that low, find that channel and get in off that, right? Get in off that first test off the low of that channel. There are a couple different variations of breakouts like this. For example, sometimes we'll get this really strong spike up, this shallow pullback, and this higher high in price. I call these 2-try breakouts, right? This would be kind of a second variation of a 1, 2, 3 breakout. Love to use a trap entry on that one, right? So again, strong run up, shallow pullback, higher high in price, grab that trap, right? Grab that trap. And then what you want to remember is whenever we have a range, the size of the breakout leg creates a measuring leg. All right. And I know this leaves a lot of the unknown for tomorrow, but if we do get that, 1, 2, 3 breakout, if we do get one of these breakouts tomorrow, the size of that breakout leg will help you figure out kind of how far up this market wants to go. Because, unlike the Nasdaq, the all-time high is right there. Right? So that's going to give you an idea for kind of where this market wants to go. Now, how can I sell this market right now? How do we sell it? Well, there's one option, if we were able to, let's just say, for example, right, the bears go once, the bears go twice, and, we take out that high, if we don't end up pushing through that, again, I call this the pendulum swing, right? If we don't push through that pendulum swing, at that point now, I might look for a reversal. Right? And to do that, we're very bullish in this example. See, let the buyers try once, let the buyers try twice. I always like to, whenever I'm trying to sell something, I always like to sell at resistance. So draw a trend line overhead or look for a trap overhead, right? And we can short that back down again, right? So buyers try once, buyers try twice. We've taken out that high. We haven't broken through the pendulum swing, as we call it, right? Swings down, swings back up, right? And we start looking for those buyers to struggle up there. And once they do, right, their stops are sitting right below that low and we can short back down again, right? It's a 2-try failure that's used as a reversal off of that high. What if we keep going lower here? Right? What if we keep going lower here? So at this point, we're very bullish. We're in a great spot to get long here if we can get the right setup. But, let's say, for example, right, the market, of course, right, we draw a little trend line over here. We pop it up here. Let's say, for example, right, the bears come in and they just crush this thing going lower. right? Get a nice little trap off that high. That would be a pretty good trade, by the way, if we had a little more bearish momentum on this, right? But let's say they just crush this thing and run this thing lower. If that happens here, right? If we were able to see that, we could now go out, find that new channel, right? If we were to get that little, trap and run going lower, find that new channel, mark off the low, mark off that high. And usually what we're going to get when you see stuff like this, there are 3 different types of entries I look for as we're going, as we're pulling back. I'm going to chase the market, right? So as the pullback, for example, traps. Traps are always kind of my bread and butter off the top of a channel. Traps, buyer failures, right, off the moving average, and then pullback combinations. There really is a lot of ways in which we can sell off the high of that channel. Now, this is a 5,000 tick chart, all right? I'm not going to trade these setups on a 5,000 tick chart. We'll drill down to a much faster time frame, but that's something to keep in mind. 1, 2, 3. And then grab your trap, grab your failure, right? Grab your pullback. Now, remember, I'm just simply kind of talking this up right now to go over my favorite setups here for tomorrow. I have hundreds, probably more than 100 at this point, examples of these price action entries using our favorite futures markets in our trade room. What I'll do is I'll put a little link up here for our quick start class. As part of that quick start class, you're going to learn my 3-step strategy. You'll learn how changing market conditions tell us where the best trades will be that day, so you know what to wait patiently for. Then I talk about how to find the best levels of support and resistance, the ones you can trust, and then how to use those levels of support and resistance along with price action entries, things like failures, traps, pullbacks, and strength. If you haven't grabbed it yet, definitely grab that quick start class, and it'll be a nice little shortcut, right, to bring you up to speed with how we trade every day in our trade room, and you'll get a lot of value out of that, whether or not whether or not you trade the S&P, the Nasdaq, whatever market you trade. It applies to any liquid market. So that's how I look for this thing to run lower. One more thing you want to keep in mind too, it looks like we may end up grinding down, right? If it does grind down, just simply draw that trend line off that low. Keep an eye out for that channel, and we can look for, again, that pop, that failure, right, and that pullback combo as we go. I could also grab one of those 2-try traps as well. Strong move down, shallow pullback, right, lower low in price, trap high. That'll also work as well as we go lower. Where do we think the bears want to go? We know the bulls want to go back to retest the high. Where do the bears want to go? The bears want to go back down to those lows from today. We had that range from yesterday. The bears will want to go back and take down those lows here for tomorrow. But be very careful though, being a seller until we can see like a pullback and a jump going lower. We really got to get some strength going lower here, because even if it kind of grinds a little bit lower here, they may take out that that range high and 1, 2 and back up. So we really got to get some momentum here building for those bears before we can do much with it, or we got to wait for the price to retest the high and then look for those exhaustion, two-try exhaustions off the high of that range. All right, pretty good plan of attack in the S&P. Again, looking forward to a busy day tomorrow in our trade room. Over on the Nasdaq here, Nasdaq is very similar, but as you can see, boy, the Nasdaq, you can tell these buyers mean business right now, because they closed pretty much right at the highs, unlike the S&P, which of course pulled back off the high. It makes sense to me, the Nasdaq probably has some FOMO because their all-time highs are still waiting up there, whereas the S&P already has their all-time highs, right? Well, not yet, but they're knocking the door here right now in the S&P. So there might be a little bit of, FOMO going on, right? A little bit of the all-time high jealousy here from the Nasdaq traders. But all kidding aside, though, what's going on right now on the Yen Q? You can definitely see, right? Very similar to the S&P, range, breakout, range, breakout, range. A lot of what we talked about on the S&P can really directly be related to the Nasdaq here right now, right? I've got a bull market into a trading range. I'm trying to find levels of support, which there's plenty of underneath us. We'll use those failures. We'll trade that rotation, right? And then trade that breakout, going higher. So, we're not going to reinvent the wheel here. on this Nasdaq. There is one more very interesting difference here on the NQ, and that is this spike in channel. It looks like we have a spike up into what you can probably see there is a channel. Now, spike in channels, right? Spike in channels are very important clues because they most often pull back right into the base of that channel. Okay, you'll notice that, and you'll learn this in our video classes here at School of Trade. But you'll almost always see that nice pullback right into the base of that spike in channel. Now, this pullback, you'll notice, has potential to really line up nicely with the low of this channel, with this area of support, right? This 16,270 area. It's a fantastic area to get long. So, in all reality, I think I could be a little bit more aggressive on this Nasdaq than I would be on the S&P, right? The Nasdaq, again, closed very high. The Nasdaq, of course, has a spike in channel. So I'm definitely willing to be a little more aggressive on my entry. So knowing that, there are three basic types of entries that I'm going to be looking for. One will be a shallow pullback. One will be kind of a modest pullback. And the other, which is not anticipated, but you got to plan for it, is going to be that deep pullback. Now, whenever I have a modest or shallow pullback, I always like to look for a trap entry. The reason why is because you want to buy as low as you can. And so whenever I see a shallow pullback, in this case, again, like I said earlier, there are quite a few reasons to like this shallow pullback right now. The problem, though, is you can definitely see there's a range here. And so I would like not to get that aggressive. I don't want to be gambling on this. So what I'll do is I'll look for a trap entry on the way right back up. And then remember, like I mentioned earlier, the size of that pullback or the size of the move below the range will oftentimes line up right with that same amount. And that's going to give us kind of that idea of whether or not we've got a breakout, going higher. You know what I mean, right? So this will be the way I would like to buy this market on a shallow pullback. If we get a little bit deeper pullback here, we still have quite a bit of bullish momentum. So in that situation now, I'll try to rope in those bears with a seller failure pattern, and then I'll definitely look for that pullback combination. This is one thing we didn't mention on the S&P. This can also apply to the S&P as well, after, of course, we get that two-try failure. But imagine now, right? We pull back off the high. We get underneath the moving average, right? We get underneath the moving average. The bears come in. They try to get short on the pullback, right? Kind of looks like that, right? They go up. They pull back. The bears try to get short. And you can literally just buy right into their stop losses. That's exactly what I'm looking for, right? Underneath the moving average. And then, like I mentioned on the S&P, mark up that high, mark up that low, and trade that turn. So failure pattern off the low. In this case, I could be a little more aggressive. I don't need two tries, right, like I had on the S&P. And then we can grab that little pullback right off of that channel as we go where? As we try to complete the rotation, right? Mark up that amount lower, mark up the amount higher. That's now where I'm anticipating this market wants to go. Now, once we get up there, the buyers may struggle. They may try once, they may try twice, and we may shoot back down again. That happens a lot. Okay, we may break right through it. We may push right on through it, and that might be our breakout. Right? That could easily be our breakout here. So third one, and then we'll talk a few more breakout scenarios, right? Third one, what if we really pull back, right? What if we really, really pull back? We run all the way down to the base of that channel. We really get a deep pullback now. When that happens, it doesn't mean the market's now bearish. It just means, a lot like the S&P is right now, we have to respect the bears a little more. On a shallow pullback, you can get relatively aggressive here. If it really pulls back, though, now what I like to do is I like to look for that two-try failure, right? Wait for those bears trying once, wait for them to try twice. All their exits are right there. Remember, anytime we see a real strong move in one direction, the odds are very good they're going to get a retest at some point, right, the following morning. And so we know we have those stops are waiting right there. We can grab that failure. Now, oftentimes, these deep pullback failures because they catch so many people off guard. They oftentimes will really jam and run higher. When that happens, look for a trap entry before you go back up to retest the high. And I say this because, ideally you'd get that 1, 2, 3, find that new channel, you know what I mean? And you'd buy off that low. Ideally, you could trade that rotation, like we talked about so far. But again, when you get these really deep pullbacks like this, oftentimes deep pullbacks, when those bears realize they're wrong, everybody gets out and the market and the market just snaps right up. Excuse me for that, right? Snaps right up. So it really digs in deep here, bears once, right? Bears twice, and it really snaps and runs back higher now. Now think about that trap, right? Because you're probably not going to get that nice, that nice easy pullback. I hope we do. Don't get me wrong. I mean, that'd be great, right? Little failure, little pullback entry there. That'd be fantastic. But it doesn't happen as often when you see those really deep pullbacks. Oftentimes, the only option you're going to get is going to be before you go back and retest those highs, grabbing that trap. Right, so it's a two-try failure because of the strength of the pullback or the depth of that pullback, and then again that trap entry. The trap entry is where the money is because again, right, it's right before, or not where the money is, but the trap entry is oftentimes the only option you have before you can go back up and again, retest those highs there. So be aware of that. If you're scalping along with us tomorrow morning on the Nasdaq, right, going back up to retest the high, and then a couple things as far as breakouts go. If we get that deep pullback and those bears, if they hold the pullback and jump, that's a reversal, right? That's a successful breakout of that trading range. I'm going to mark up that low. I'm going to mark up that high, right? Find that channel by drawing off the lows. We'll drill down to our faster time frame, and we're going to grab whatever entry setup we get. Again, oftentimes it'll be a bull trap or a buyer failure into a pullback combination. Again, if you've taken that free quick start class I mentioned, you know what I'm talking about, right? You know what I mean when I say 1, 2, 3 reversal, right, into first channel test. Always going to be the best test. Where do we think the bears want to go? They want to go back to that range, just like the S&P. Right? Just like the S&P, there's a big range down there. Ranges, of course, act like magnets. Again, too, the market, there's a lot of ways the market could reverse here. We may poke lower and start to grind and grind and grind. When that happens, just simply stay patient, find that new channel, right? Find the new channel and just simply wait for that short, right, off the high. It's not very difficult. The hardest part is simply staying patient and not chasing it as it goes lower, right? So keep an eye on that if the pullback turns into a reversal. Now, as far as a breakout goes, it is definitely going to be a good idea to keep an eye out for a breakout. Like a two-try breakout, right? Strong move up, because right now we should be rotating down. Right? We should be getting that pullback right now. If the market is balanced, we should rotate back down to this, 16,270. We may not be that balanced though. Let's face it. Again, we closed almost right at the highs here. So if we do see a strong punch up, a shallow pullback, and a higher high in price, that trap is money. Right? That's my favorite trade, right? In the short term, of course, on the way higher here. Where would the targets be? Remember, breakout leg is the measuring leg. And then, of course, we got these big targets, right? Big areas of resistance up overhead. I also would not be totally surprised if we saw the market, right, poke its head higher, pull back, right, and jump off that. Again, we call these 1, 2, 3 breakouts, right? This one's a little bit different, right? A two-try breakout just jams higher. Shallow pullback, right? There's a difference there, right? This one here is a 1, 2, 3 breakout pattern. Mark up that high, mark up that low, drill down to your faster time frame, and again, we'll grab the entry off that low. Little bit different than having a very strong shot, a shallow pullback, and then waiting for, right, that trap below that low. Just a little bit different setup, right? Same idea, right? Strength, breaking free of that, right, of that trading range. One more, which I would definitely keep on your radar for tomorrow, will be a breakout pullback. So imagine this area right here, right, acts now as support. So its resistance until it breaks. Then, of course, it becomes an area of support. What usually happens in these scenarios is you'll see the market run higher, and it will almost go too far too fast. And the reason what will happen is the market will kind of kick back, and people will go, wait a second, I don't want to buy way up here. This oftentimes happens when nobody's looking, early in the morning or late in the day. And so you get this big run, low volume run. Nobody wants to buy way up there. So it allows the market to pull back. When it pulls back, this is your chance now to trap in those bears with a failure pattern. That's how I like to trade breakout pullbacks, right? I don't try to pick the bottom on that pullback. Right? Because sometimes it'll go right up and come right back down in again, right? I wait for it to punch up, try to find those prior highs, get underneath the moving average, right? Let those bears come in and try to short this thing back down. Once those bears commit, we know exactly where their pain is, and we can ride that sucker for, again, the breakout leg is the measuring leg, right? That'll kind of teach you kind of where the next objective is going to be. And I'm sure there's going to be something I'll miss here tonight. I'm sure there'll be some adjustments tomorrow. So, definitely be there with us tomorrow in the trade room, and I'll make sure you have anything, any curveballs that happen here overnight. And I should also mention, right, if we do keep going sideways here, this goes for the S&P as well. We want to stay out of the middle of the range, and we're going to pretty much the exact same thing, right? So if it goes sideways, just wait for the pullback. Wait for the pullback or wait for the breakout. It really is that simple. Just don't force the sucker right inside of that trading range. Let's keep going. Let's wrap it up here on the oil here for tonight. I'll tell you, I mentioned in the introduction that oil seems like it has a bit of an identity crisis going on right now, and it definitely looks like it. The reason why I mentioned that is because you can see the market made this rip higher. And of course, normally whenever you see a big, strong move going higher, normally it's only a matter of time before the buyers just retest that high. We call these open loops, right? Whenever you see a real strong pop up, you go, okay, let's close the loop. Oh, they didn't do it. And the bears take it, right? Big, strong move down. They have an open loop. They didn't retest. And then it pops back up again, right? Strong move up. They didn't retest. So whenever I see markets that jump up and can't keep going, run lower and can't keep going, run back up and whenever I see stuff like that, it's smelling like a range here, right? Yeah, there's a little channel on there somewhere, but right now we're probably looking at this as some sort of range up here, range there. They're going to probably start to fill in this area here, right, overnight. This could really be a messy market tomorrow ahead of that oil report at 10:30 Eastern time. Whenever we have a really big range like this, you want to buy low, sell high, fade the breakouts. And then if you can get enough strength and if they can kind of hold the breakouts, we can trade the breakout, right? So think of it this way. It's going to be a relatively wide trading range. Okay, wide ranges are important for two reasons. One, you can really trade the edges. You don't need a very big breakout when the range is really large. And the reason for that is because the risk-reward ratio is great, right? I can risk small to earn large, right? Compare that to a small range, and I really can't trade the edge of a small range. You know what I mean? You really can't trade the edge of a small range because, again, think about it. The risk-reward ratio is off. You know what I mean? So you have to wait for a big breakout, like on the S&P right now. You got to wait for a big breakout to trade a narrow range. On a wide range, you don't really need that big breakout because the risk-reward ratio is there. Okay, that's the good part about a wide range. We can really trade aggressively at the edges. However, the downside to a wide range is momentum. Momentum builds back and forth. So what you want to be careful with is you don't want to get too aggressive at those edges. You want to use those two-try failures, right, around those edges. So if you kind of go back and look what I'm talking about here right now, right, again, we don't exactly know where that range is right now, but, it doesn't take a lot to think, okay, the range could be forming right about there, right? So we roll lower, we can really trade the edges, but I'm going to focus on those two-try failures. right off of that low. Now, as we go higher, we definitely have that little bit of bullish, edge right now, right? So if we go higher here, yes, I can definitely look for, again, we go up, the buyers once, the buyers twice, stops are right below that low, and we can sell back down again. That will definitely play into that. But at the same time, though, let's say, for example, again, we look for a breakout. We've talked about a couple different breakout patterns so far, right? So, again, we go up, right? The buyers once, the buyers twice. We're selling it back down again. We're using those two try failures to short off the high of a wide range. Again, we can trade right around the edges. We don't need to leave the range very much because the risk-reward ratio is going to be great. But we do need to respect that momentum for the bulls, which is why we got to make them try twice before we sell it into their stop losses. But just think for a second, though, right? What if they were to jump up? What if they were to jump up and we were to see something like this, where we saw a higher high in price or shallow pullback, right, in that higher high in price? I would tend to believe there's some money to make on that trap right there, right? I would also think, too, that if this market was to, for example, pull here, grab that pullback, and we get that 1, 2, 3 breakout, right? 1, 2, 3 breakout. There's also money to make off the low of that channel. First test is always the best test, right? And again, we'll drill down, right? This is a 2000 tick chart. We'll drill down and grab that trap entry, that failure entry, that pullback entry off the low of that channel, right? And then again, as always, the breakout leg is almost always going to be your measuring leg to know your targets, right? Where you're going from there. So that's the real core kind of key takeaway here tonight on the oil. It's always a bit difficult, to analyze charts on oil before the oil report on Wednesdays, because Wednesdays are always a bit of a fussy day, on oil futures. But again, what you want to think about is up 1, 2 around the edge, back down, right? Down 1, 2 around the edge, back up. Try to, if possible, stay out of that middle. And, again, we're going to probably see it get a little messy here inside that range. And then again, we've talked about a number of different breakout patterns, going lower, right? Can they run this thing lower? Can they hold the pullback and jump off the moving average? If that's the case, don't worry about where you are. Find that low, drill down, find that high, and then grab your first test off the high of that channel. Same thing, going right, going higher here. Or maybe we really rip going lower. We get that shallow pullback, that lower low in price, and that'll be good for a trap. And then again, right, the size of the breakout leg will determine kind of how far that market wants to go. You can easily see there's plenty of support levels down here to use as targets, right? 79.30, 79.45, and we got plenty of resistance up overhead at 83.20 or so, right, for a major high here. So we're going to use those levels as targets if we can get a breakout. But really, between now and that news event tomorrow morning, we're going to wait for it to go down, get those bears to fail, and buy it back up, wait for it to go up, get the buyers to fail, and sell it back down. Again, there probably is a little bit more bullishness, little bit more, right, if we go higher here. So, keep an eye out for this breakout running higher. Use those 1, 2, 3 breakout patterns to find that, right, to find that channel. Use those 2 try breakout patterns to grab that trap. If the market was to punch and start to grind, right, going higher, right, grab that grab that grind high, find that channel, stay patient for that trap, that failure, that pullback combination, right? And again, we've talked about a few more here tonight on this video. But that'll cover us for the oil, at least for now, right? And we'll know more tomorrow morning once we get our hands dirty and once we can see how this overnight session develops here. We're buying low, we're selling high, we are fading the breakouts until we see evidence of a breakout, right? We always treat the range as the magnet until it stops acting as a magnet. All right, wrapping things up here for tonight. Again, thank you so much for sticking around tonight on the video. Don't forget, I'll put all of the links you guys need to come out and trade this stuff with us every morning at the opening bell. Our trade room opens up at 8 o'clock Monday through Friday. I'll put a big button for you right below this video on our trading blog or our website, and I'll put the links you guys need in the description of the YouTube video. Make sure you grab that quick start class, again, linked up in the upper right-hand corner. Learn the strategy, Go out and trade it, right? You'll see why I love it so much and why our clients do so well with it every day in our trade room. But that's it for me, guys. That's it for me. Thanks for sticking around. I'll let you guys go for tonight. Get some rest. Should be a busy day tomorrow in the markets, whether you're on your own or whether you're with us tomorrow in the trade room. I'll be back tomorrow night. We'll keep this party rolling here this week, hopefully a bit earlier tomorrow night. I hate to put these videos out so late here. So get some rest. Have a great rest of your evening out there. Be well. Be nice to each other and be here next time. Adios, amigos. Bye-bye for now.